Hello, this is Bill McAfee. I'm the president of Empire Title Company in Colorado Springs, Colorado. Here to give you a little bit of a forecast in the Pikes Peak region. For those of you that have seen videos in the past, I know you're going to be very disappointed I'm not in a bunny outfit since this is April. The truth is I couldn't find one that would fit me, and how could the ears be any bigger than what this is anyway, okay? Anyway, just kind of wanted to start out here for you. The average sales price, we dipped dramatically in the month of March. But here's what you got to look at is on a running average, we're starting to dip down. I've said this in previous videos. I believe the banks are going to dump their bank-owned properties at an increased rate from what they did last year. What that's probably going to cause is some easing in prices, and I think we're seeing that. Going on to the next slide, this is the median sales price. Again, a dramatic drop from about 190 to 180,000 the median price. But here's the picture. This is a running average of the slide I just showed you. Taking out the highs and lows, we're starting to dip down again, even on a running average. So I expect some softening through the year. The number of sales, God, we had a huge increase in the number of sales. We had 767 sales in the month of March. The month of February, we had 448. It's about a 73% increase in the number of units sold. Moving on the number of sales on the previous 12 months, notice how we've been really trailing down on the number of sales. Last month obviously helped us some. Active listings. This is the summer in which you see the camel humps. In other words, the number of people listing their properties really balloons up. So what happens is that gives a large inventory, the old supply and demand. There's so much inventory out there, the buyers are looking all over and there's so much to choose from. If we don't see a big spike this summer, one thing I'm looking at is the buyers may start to burn through that bank inventory. And by the way, don't let me forget this. The bank inventory is something you investors need to be looking at because you're seeing some deals out there. I run a short sale company, and I'm seeing where we try to do the short sale at $240,000. They come on 3 months later with an asset manager listed at $219,000. Had one the other day. They turned me down on the short sale at $115,000. They come on 2 months later listed at $89,000. Don't forget those bank loans, you investors and you buyers. The active listings on a previous 12-month average were starting to tail down, and that's actually a good sign because that's the number of units available for sale are actually going down. The inventory and number of months. We're still over on this, or if you look over right here, we're still between 6 and 7 months of inventory. 6 months is kind of a neutral. That's buyers and sellers are kind of in a neutral place. When you go back here where we were in 2008, where we almost reached 9 months, that is an incredibly strong buyer's market. They can do whatever they want. They can ask for whatever they want. When we get down in here, this is like a 3 or 4 month inventory. That's what we had in 04 and 05. That's when the sellers just named their price. Okay, so that's what's going on with inventory levels. Look in here, buyers and sellers both, mainly buyers. Watch this. Interest rates are going up. I'm just going to touch on this real quick. If Japan has to use money to rebuild their country and they're not buying our debt, that could take the demand for our debt down, especially in the 10-year note and bond, which could drive interest rates up. I am concerned about that. I am concerned also about oil prices and the normal stuff that happens in the government. But I want to share with you the fundamentals in our local market and the real estate market are very strong. If you don't believe me, you know what? Consult your local real estate agent because it's important. Okay? Look in here, about 75% of the homes that are sold in our MLS are below $250,000. Basically, the reason for that is that's where the income brackets are in our current market. It's not there's not great deals in $400,000 and $500,000 and $600,000 and $700,000 markets. That's what people can afford to buy, especially with the very stringent lending standards. Look at here, the year-to-date sales range. This is the $200,000 to $250,000 price range. We pushed last month over 250 units that were in that out of the total, and then this is all the other price ranges broke down. Here's the months of inventory. Again, fundamentals in our market, every single price range under 250,000 is well below 6 months, which I told you that's where it's neutral, okay? 6 months is neutral between buyers and sellers. Looking on here, a year-end recap. The average price is up significantly. I still anticipate that to go down based on the inventory that's coming from the bank-owned stuff. The median price is actually level. It's where we were last year, comparing quarter to quarter. The number of residential units that sold is actually down compared to what it was last year, even with the big increase in March. The inventory levels are actually creeping up a little bit. Part of that is because the number of sales had been down so much. The foreclosures, this is great news, and I really want to touch on this. Comparing 2009 to 2010, the number of people going into foreclosure was down 12%. Comparing the first quarter of 2011 to 2010, we're down 19%. Bottom line, the number of people going into foreclosure is going down dramatically, and I think we've bottomed out. So here's to sum up the whole thing. If you're an investor out there and you're ever thinking about buying, you need to be buying right now. Interest rates are fantastic, and I think they're going to go up. There's bank-owned properties that are available and short sales, okay, that are out there. So there's still deals for you to get. Sellers, this is not the year for you to chase the market. You're competing against the bank-owned stuff who have no emotional ties to this. They are going to sell these properties, and I just gave you examples earlier on in the presentation. They're going to sell these and get rid of them. You need to consult with your professional real estate agent. They can lead you to these properties. Anybody that's ever thought about being a landlord right now, rates are fantastic. You can buy, you can cash flow. These things are absolutely fantastic. And I'm going to give you one other program just for watching this. There's a program called the VA VID program. For investors, it's like you can bring 5% down, okay? And the rates right now are about 4.5% on 15-year mortgages. That's an investor loan. You just don't hardly find that. So that's one of the things that you need to be consulting with your local real estate agent about. Those are things that they can help you. Buyers, get into this market. Don't lose out on the interest rates. One other quick thing for buyers. As of April 1, the mortgage insurance went up on FHA loans, and it went up dramatically. So your buying power on that type of loan program, on a $250,000 loan, just the mortgage insurance is probably going to be more than $100. This is Bill McAfee. I hope this is helpful for you. Our fundamentals in this market are fantastic. I'm guessing we probably got 2 years to burn through the inventory, and one other thing you only get here, I did research through the public trustee. We only have about 6,200 properties that have gone back to the bank from 2008 until now. Okay, I believe we can burn through the balance that's left in there probably within the next 2 years. And guys, we have no standing inventory. Once the builders start building, it is going to be fantastic because everybody goes back to work. Okay, fundamentals are great. Barring world circumstances, you're sitting in a great place. This is Bill McAfee. Thanks for watching.